seated. We would like to remind you to kindly turn your mobile off or switch to silent mode for our convenience. Once again, we are about to begin the third session. Please take your seats. Distinguished guests, honorable speakers, ladies and gentlemen, we are now ready to begin the last session of this conference with a focus on responding to changes in the global landscape. This session will discuss how Asian countries should deal with challenges arising from changes in the global economy while maintaining high growth, resilience, and macro-financial stability. We have 5 distinguished speakers for this session. Deputy Governor of Bank Indonesia, Bapak Peri Warjio, Assistant Governor of Bank of Thailand, Mrs. Chantavarn Sucharitakul, Deputy Governor of Bank Negara Malaysia, Ms. Jessica Chu, Deputy Governor of Bangko Sentral ng Pilipinas, Mr. Diwa Gwinigundo, Chief Economist of AMRO, Mr. Ho E. Kor. Chairing this session will be Mr. Chang Yong Ri from the IMF Asia and Pacific Department. To start this session, I would like to briefly introduce Mr. Chang Yong Ri. Chang Yong Ri is the Director of the Asia and Pacific Department at the IMF, where he oversees the fund's work on the region, including its lending operations and bilateral and multilateral surveillance. He has published widely in the fields of macroeconomics, financial economics, and on the Korean economy. Mr. Chang Yong Ri, the floor is yours.
Thank you. It's my great honor to be a panelist in this with our distinguished speakers today. As our moderators already introduced our panelists today, why don't I first invite all of them to come and then we'll start the session soon, please. And all of our panelists are very experienced and long-time policymakers in the region. And I think it's a waste of time for me to introduce them again. And you know them very well. So probably moderator introduce me more in detail because I'm a new, but you must know all of them. So please allow me not to introduce you one by one again. And also, this is the last session on this conference. And this is a wrap-up session. So we're going to probably cover the topics that our previous 2 sessions covered. One is what is the changing environment of the global economy, and then also the new source of growth for the ASEAN economy. But we will focus more on the regional perspective, and because this is an afternoon session, I want to be a little bit, we decide and we want to be a little bit more innovative. So we want this discussion to be more interactive. So we made a rule that every panelist, when I ask questions, will give us answer within 2 minutes if possible. Then we want to have a more interactive responses among the panelists. So let's start with start from the global economy and the economic outlook in the region. In the first session, MD mentioned the IMF forecast for the global economy. We believe that this year, the growth is broad-based and the growth momentum is forming up. And we have some more optimistic view about how the economy will grow this year and the next year, even though MD mentioned several downside risk and risk factors too. So why don't I ask these questions do you really see that the growth momentum is picking up in the region, especially in your country too? And if the growth momentum is strong in this year, and what are the major driving force for this, relatively high and robust growth in the region and your country? And what are the key risk factors that you have some concern? But we can discuss in more details, but why don't you go very quickly to this answer, why do you believe that the growth momentum is picking up? Perry, can you start from you?
Oh, yes. Yes, of course, Sang Yong. The growth momentum in Indonesia is gaining momentum, especially since mid of 2015. We have quite robust economic growth, increasing growth, and much wider support of the growth. Used to be only on the fiscal stimulus and infrastructure, investment in infrastructure, but our source of growth is becoming wider. External demand because of global economic recovery, so export is picking up to support our economic growth, but also starting investment in non-construction. Investment in transportation, communication, as well as the export-related sector. We believe that last year we experienced 5.07 economic growth, 5.19% economic growth in Q4 last year. But we will have a high economic growth, 5.3%, and more than that. I think we have a much wider support of the growth. The private investment will be also support of the economic growth. Yes, indeed, this will be gaining momentum. Yeah.
What are the risks that you consider?
Well, for Indonesia as commodity exporter countries, we always looking at the three following risks. First is, of course, the risk of the how global economic will be continuing, whether the fiscal stimulus in the U.S. will be a short-lived or long-lived. Okay. I think this is, the peak is 3.9% global economic growth, or increasing growth in the U.S. will be continuing going on, or whether only this year and so on. Also, we need to look into the China rebalancing. We are quite positive on China. 6.7% is good for this year. Second risk is, of course, the commodity prices. Commodity price, we are benefiting from higher commodity price, but of course we need to look into whether the commodity price cycle will continue to be high, prolonged, or there will be a downward turn on that. The third risk is, of course, normalization of the Fed. Not so much about normalization process of the Fed policy, but how the dynamic of U.S. monetary policy vis-a-vis Trump fiscal policy, which is, how this will be evolving, whether will be increasing only the short-term interest rate, or will be also increasing the longer-term interest. This is actually the puzzle that I'm looking forward to have your view on this.
Yeah, sure, we'll discuss. It's very hard to hear. Chantavan,
Yes, thank you very much to the Indonesian authorities and the fund for having us here. It's been a pleasure and a great seminar. On the global growth and Thailand's growth, Thailand's economy is very much integrated into the global economy. So we really see the significant improvement, especially on the export side. Last year, our export grew almost 10%, whereas the economy is slightly less than 4%. So the other drag on the economy would be domestic consumption, investment, and other. Unlike Indonesia, which public investment is doing very well, ours may still be a drag, which we hope, in terms of risk, that we would be committed in the execution side of public investment for the years to come, so that we are able to maintain that growth momentum for Thailand.
But for the risk factors you share
Yes, the global factor, the geopolitical aspects, I think as an integrated economy, we all share that same.
Jessica, Malaysia.
Thank you very much. And just a quick thank you to Bank Indonesia and IMF for hosting this event. Malaysia as well, I think, is positive on the growth outlook for Malaysia. We saw growth at 5.9% in 2017, and we're expecting growth in the region of 5.5% in 2018. In terms of key drivers, it will come largely from domestic demand for Malaysia, and with an uplift, of course, from the external sector, which continues to ride on stronger global trade. Having said that, I think probably we do acknowledge that there were some one-off factors in 2017 that we think might be difficult to repeat in 2018, and namely, the strength of the global trade pickup that we saw in 2017, as well as improvements in commodity prices. I think those incremental impact is probably going to dissipate a little bit in 2018. So therefore the moderation. In terms of risks to growth, for us, the financial linkages, the growing financial linkages for the economies in our region, obviously it will continue to present some uncertainty in terms of financial volatility that we continue to be exposed to, and we were just recently reminded again of the fragility sometimes of financial conditions. But having said that, we are working really hard, and as many of you would know, we've rolled out a few measures in the last 2 years to deepen our financial markets. So we think that should put us in a better position. The other risk I would mention is probably debt levels. I think that is both at the global, even on the global front, debt levels are the highest probably that we've seen in a while. And that will continue to present risks as well to our economy, because we are obviously a very open economy as well. So for Malaysia at least, household debt has been a point of focus for Malaysia for a number of years now. And again, here we have taken a series of measures, and I am pleased to note that at least in Malaysia's case, we have seen a dramatic improvement in terms of the trends that we're trying to engineer for household debt. So, the growth trend has moderated significantly. House prices are also moderating in terms of the pace of increase. And I think that gives us more comfort in terms of being able to withstand risks.
Yeah. Let me back to this leverage issue later one more time. Iwa?
Well, I believe that the global economy started to turn around the corner even last year. Mm-hmm. And this is felt even in the Philippines. In the last 3 years before 2017, last year, we were growing by almost double digit. But because net exports were negative, we were pulled down and we managed to grow by 6 to 7%. Now last year, 2017, while domestic demand continued to grow, we felt that net exports started to contribute positively to the total growth. Mm-hmm. So we grew by about 6.7 last year, and I think 2% of that came from net exports. So the growth of the global economy can be felt by, one, recovery in exports, our exports, remittances from overseas Filipino workers in those areas, including the ones in Europe, Middle East, and even in the US, in North America, went up by about 5%, much more than the original target or original projection of 4%. FDI, particularly coming from the US, also went up by close to $10 billion. Very unprecedented even before 2017. BPO revenues also went up by nearly 10%. I think these are the telltale signs of the strong growth in the global economy, and we can feel it. After all, the U.S. and some advanced economies have started to normalize their monetary policy, and this is an indication that indeed their respective economies have started to turn around the corner.
Boy, we just heard the ASEAN 5 countries' perspective, but given that your AMLO covers more than ASEAN 5 countries, can you elaborate the regional economic outlook, focus more on the frontier ASEAN economies?
Okay, as you said, we monitor all the East Asian economy, including the Plus 3 and the ASEAN 10, right? The CLMV countries are doing relatively well. They've been growing at 7 to 8% before, and actually they've been slowing down, very much like most of the other economies in the region. But some of the slowdown is, because of supply shocks and all that. But let me just step back a little bit, because I think this global reflation, synchronized reflation of the global economy, has been a very big boost for the region because if you remember, after the global financial crisis and the European sovereign debt crisis, external demand basically collapsed in the region. And so the region has been rebalancing, supporting the economy through expansionary fiscal and monetary policy. And I think basically they managed to, buffer the slowdown. And by 2016, I think the region has sort of bottomed out. And at that point, we were a bit worried whether the growth can be sustained going forward. So the synchronized recovery, if you remember, happened around the end of 2016, and it has helped to lift up the whole region, right? So that allows the macroeconomic policy to be less stimulative. Because the problem with the macro policy is that there's vulnerability that is built up in the region, especially household debt, corporate debt, and government debt. And you cannot continue doing very expansionary monetary fiscal policy for too long. And some of the regions were also hit by commodity shocks and revenue fell very sharply. So I think they've sort of reached the limits of expansionary macroeconomic policy, and the export recovery sort of give the economy a lift, and help to stabilize the situation. So as a result, we have lifted our forecast for the region by 0.4 percentage point.
Oh, I see. I think, as you mentioned, I think IMF also has a very positive view on the growth of the ASEAN region overall, and it has been a growth leader. And we are focusing in general 5.6. According to our January focus, we are region as a whole 5.6%. ASEAN 5 is around 5.3%. But from January on, I think the recent data shows that we might revise the growth rate a little bit at this moment. So we really believe that the ASEAN remain as a most resilient growth region, and we're happy about it. And as you mentioned, it's a part of the broad growth on the world, but also when you look at the source of growth in ASEAN, yes, export growth is definitely one of the major factors, but you can see, depending on the countries, domestic demand is also picking up. So it's a quite a good sign. So I do not want to repeat what are the kind of stimulus and the positive side, but IMF is paid always being to be cautious and be pessimistic and always check the risk point. So let's focus a little bit more risk factors. Tiwa, you mentioned that especially export is quite strong, but as our MD mentioned this morning, depending on we have a certain geopolitical risk, including trade tension, and we are worrying about U.S. and China trade tension and this some protectionism sentiment growing global economy may grow up. But do you expect this current trend of the export growth will continue, which benefit the ASEAN region, or are you concerned how this current pickup of the export growth, this trade growth, how long is it going to last?
Well, both U.S. and China are very important trading partners of the Philippines, particularly the U.S. China has been increasingly increasing its share both of our exports and the source of our imports. Now, this threat of retreat from multilateralism, particularly in the U.S., I think we have not felt it at this point. Mm-hmm. In the case of China, the rebalancing of the growth strategy of China in favor of more strategic and lower growth in the last 2 years, to us, again, has not been felt. In fact, the share of both China and the U.S., despite these threats of more protectionist and more inward-looking policies, have not been felt. In fact, for 2017, we experienced double-digit growth of exports. If at all, it's the BPOs, the revenues from BPOs. Last year, in 2017, we realized about, at this point, a projection of about $25 billion, or a growth of nearly 10%. But the ones coming from the U.S. appear to have moderated, appear to have slowed down. The reason for this is that most of the locators in the Philippines coming from the U.S. Withheld or suspended their plans for expansion. And this was because of the announced policy of the U.S. government to keep jobs at home, including outsourcing businesses. But to a large extent, the BPO revenues continue to be quite robust, but at this point, we don't see, as yet, any threat to continued resiliency of both merchandise and services exports of the Philippines.
Okay. So in sum, you do not worry about the new U.S. tax reform, which favors for the repatriation of the profit and the repatriation of the manufacturing company and other service to the U.S. It's not, you do not see yet the impact.
Not yet, at this point.
Okay. Given that you mentioned China, I think let's just focus one more thing on China and then move to the U.S. policy. Perry, you said that you are relatively optimistic about China's continued growth, right? But when I travel more to the West, always I heard that question when China's financial market will melt down and then China's growth will stop. But you think that China will continue to have its high growth rate? What's your view on China?
Of course, the issue of rebalancing and financial restructuring in China is, continue to be monitored. But we see a number of progress and reform being done in China on how rebalancing their economic growth, to what the domestic demand is already seeing. Financial restructuring, including addressing shadow banking, is also progressing. But things we see moving on the right direction. We are forecasting China economic growth 6.7%. Our export to China is it used to be 16%. Now it's about 14%. Mostly of our commodity goods. The issue that we are watching is not so much about how the strong of their economic growth, but the new reform in China, which is going into green, more friendly environment, economic development. This also will impact our export to China. As you know, we export to China coal and others. This may be impacted, even though China growth increasing, maybe our export of coal to China may not be impacted. But luckily, I think for Indonesia, diversification of export is becoming one of other sources, not only to US but also India. India 7.2%. The demand from India about palm oil, other commodity is also other source of our export. Also export to Africa. We are engaging a number of trade relation with Africa, which is also new market for our export. So we are quite confident our export will continue to support our economic growth.
I think that's consistent with our current view. We believe it's not just the US-led growth. Europe is also picking up. In Asia, it's not only the China. Japan's growth rate enormous, quite high at this moment. We are focusing Japan's growth this year also 1.2%. By their standards, is quite high. So in some sense, Asia together with India, as mentioned, we have many pole of growth. Right? So let's back to the U.S. monetary market normalization, Jessica, you mentioned. You say that looks like you're suggesting that even if U.S. growth rate is higher than we expected, together with the fiscal policy, even though they increase interest rate a little bit, looks like U.S. seems to suggest that many Asian economies may not go back to the taper tantrum period. This sounds, you mentioned the leverage issues. Are you sure that this time, even though interest rate goes up, U.S. monetary normalizations goes up, ASEAN regions are much well prepared for this vulnerability? You mentioned something, but can you elaborate a little more?
Well, I would say yes, that ASEAN economies in general have, put in place quite a lot of measures in this recent decade, at least, to deepen and develop the financial market. So certainly speaking for Malaysia, we're much more confident today than we might have been, let's say, in the period just after the Asian financial crisis, in terms of being able to withstand capital flows. So, there are a couple of factors that support this. The fact that we do have, very strong financial system and financial institutions, that we also have very large and also strong domestic institutional investors that are able to step in, and we've seen that actually happen during the taper tantrum for us as well. Also, the recent package of measures that we've introduced has allowed a lot more onshore hedging flexibilities that will allow participants in the financial markets to be able to, in fact, we're seeing quite a lot of these hedging activities move onshore when they used to be performed offshore. So that's creating more liquidity within our financial markets. So in general, I would certainly say yes. I think the other point I alluded to earlier was with respect to debt. So our government as well has been highly committed and has delivered, in fact, on its fiscal consolidation path. And that certainly will create the kind of buffers that we will need to be able to respond to shocks. Also in terms of corporate and household debt, certainly household debt is something that we remain very vigilant on. But just to share some numbers with you, back in 2011, 2012, our household debt, which is now about 84% of GDP, so it is at a high level, but it was growing back then at a pace of 12%, which is extremely high when you compare that to the level of wage growth. It's now down to 4.9%, the latest growth numbers for 2017 in household debt. So, it's really come off significantly, and we think that this is much more sustainable for Malaysia and certainly much more in line with both growth on the financial asset side of households as well as wage growth. So, overall, I would certainly say that the ASEAN countries, and certainly in Malaysia's case, we are in a much stronger position than we might have been 2 decades ago.
Yeah, I want to comment on these things because fund is all in general agree. Okay, Tiwa first.
Yeah. Well, with the recovery of the global economy, I think we can expect some normalization of monetary policy. That is a possible tightening of monetary policy in many parts of the advanced economies. Now, I think one thing that should also be monitored is corporate indebtedness. In other words, during the time when interest rates were very low, many corporates, even in my own country, the Philippines, started to take advantage of easy credit in many advanced economies. Now that there is a threat of higher interest rates, I think that is something that should be monitored by the ASEAN economies. Now, having said that, I'd like to talk about that in my own country. The total claims of Filipino corporates against their total assets is just about 9%. So cross-border claims, meaning some of them even invested abroad, over the total assets is about 9%. Now, in the case of their cross-border liabilities, the cross-border liabilities as a part of total liabilities is about 7.7%, which means that on a net basis, we still have claims from the rest of the rest of the world. The second point is how hedged are corporates. Some of those who borrowed from abroad, from our perspective, are the same service and merchandise exporters. So they have a natural hedge in case interest rates are jacked up in the US or in any other advanced economies. Thirdly, we have also to look at whether they are hedged in terms of derivatives, whether interest options, swaps, or even ordinary instrument like forwards. Again, this is something that we also need to look at, because once you have 3 or 4 interest rate hikes by the US, I think it's the corporate sector that will have to bear the brunt of that particular threat. Thank you.
Today I'm a moderator, so I don't want to take much time to give IMF view, but in general we agree. But on the other hand, we focus on more, the vulnerability and the chance for the very strong shocks. But still, when the global growth interest rate increase, what we are worrying at this moment whether it's going to slow down the Asia's growth momentum, because leverage has quite increased after the global financial crisis. So we don't expect another taper tantrum kind of big shocks, but still, how much growth momentum will be reduced in Asia, given the increased leverage? That was still the fund. Because before you go, Shantaman, I heard that now if something, I think we're expecting the chances very low, but we have been discussing that how to manage this risk, especially using the capital flow measures. And I heard that ASEAN 5 countries, ASEAN countries now preparing how to, some joint paper about the capital flow management, measurement. And I just wonder, what is your view? And probably you are responding for the fund institutional view. So I'm very curious what actually you're doing it.
Thank you, Chang Yong. It's still work in progress. We at working level, we haven't, I need to ask your permission to, we haven't tabled it to the governors, but within ASEAN, we try to open up and integrate, much like the 4 factors of production, capital, labor, and firms across each other. And one of that is to open up the capital account. So as safeguard measures, we try to learn from one another what should be the potential pitfall of liberalization if we're doing it and not well planned or unsequenced. And so those were the basis where we tried to compile certain list of safeguard measures we have used ourselves and our peers have used, sort of to learn from one another. It so happened that at that time, the fund is also reissuing its institutional view. And some of those, the Asian ways may not be very much in line with the fund's institutional view, but we are hoping to engage in a dialogue and presenting our side of the story. For instance, we have always maintained that the pecking order that the fund would like the membership to go through and exhaust more or less all the macroeconomic measures, we still would be more comfortable to have that policy toolkit available without having to go through that, because you never know if you reduce interest rate in a world that is very complicated, you create another type of risk on financial stability side. So it's still very much an unknown territory. We've lived with a very long protected low interest rate for so long. The imbalances that have been built into our system are the things we do not know that would come up. So we would like to maintain that flexibility. And the paper is still, like I said, a work in progress, which we hope to use in our engagement and discussion with the fund.
We look forward to learning and then also discussing with you. But you want to say something?
Yes, I want to come back about how we need to optimize our policy response. Of course, the normalization process in the U.S. and maybe followed by advanced country may pose us more challenging, design of our policies. But this does not mean that the effort to support growth is not there. Remember, in this region, we not only rely on one particular policy. We rely on a number of instruments of policy. So in this juncture, what we do in Indonesia, we can still maintain the stability, but at the same time support economic growth. How to do that? We have a policy mix of monetary and macroprudential policy. In this uncertain economic, global environment, of course, interest rate policy, exchange rate policy, capital flows management, this for stability. I think this for stability. But we still have macroprudential policy. Macroprudential policy in this juncture still for growth. That's why we are continue relaxing our macroprudential policy, loan to value ratio, a number of targeted macroprudential still to support growth. I also want to echo what Jessica mentioned. Financial market depending is very important. Not only to support the stability, but also to provide financing for the economy. This region need a lot of financing for infrastructure. We need to develop more instrument of earning back security, project bond, whatever, sukuk and so on to further financing of the infrastructure. We need to develop our foreign exchange market. Indonesia, for example, we have been succeeding in deepening our FX market. It used to be our size of daily FX market only 1 billion a day. Now it's about 6 billion a day. We used to only have spot. Now 40% of our FX market is derivative, spot, swap, forward, call spread, and so on. Our financing in the economy used to be 100% or at least 90% bank lending. Now 40% our financing on the economy coming from corporate bond, equity, MTN, pro note. This is a lot of instrument of macroprudential financial market deepening can be used, can be explored, can be more innovative to support growth. So I think this is the mix of policy that we do in this region.
I cannot see that your point that financial policy in ASEAN countries cannot just focus on the stability, it also focuses on its impact on growth and others. Yeah, that's a good point. But I'm quite surprised that you haven't mentioned the one word, dollar strength, even when discussing this issue. And also, I know that you are the central banker, you should not talk about the dollar, but I'm not supposed to either. But as I'm moderator now, I have can touch upon this issue. And we have been talking about U.S. monetary policy normalization and fiscal policy, and it may strengthen dollar, and then it may cause a U.S. deficit, so twin deficit problem. And we discuss all this issue. But in the last 6 months, actually, dollar become weakened. Mm-hmm. So, Hoi, I'm sorry to ask you, but they are all the central bankers. They cannot talk about dollars. So you are the only one who can freely talk about. So why do you think that the dollar has been weak in the last 6 months? And given this trend of normalization, do you expect that the finally dollar will be strengthened? Sorry, but you have to lead.
Well, I don't know if my own guess is that a large part of it is because Europe is doing so well, and the U.S. basically is weakening against the euro, and actually if you look at the strength of the euro, I think that's holding back the ECB from normalizing as well. And so I think most countries in the region have taken advantage of this to allow the exchange rate to appreciate some, because that way they can keep the interest rate down still and help to support the economy, right? And it's been very helpful actually, as it turns out. I think this asynchronous monetary policy between the G3, among the G3, with Japan pursuing still very easy monetary policy, has helped to offset to some extent the gradual tightening that we see in the US, and Europe is also following that. I think my fear is that when all three of them begins to tighten, then you're going to have a big shock to the global financial condition.
I think in your appointment, Mr. Groda, make that will be a very remote chance. So. But anyway, so I think I see that your good point, that whether the dollar will be strengthened or not. Recently, ASEAN countries rely on more exchange rate flexibility, so it can be more, has a more manageable tools. So it's a very good news. Another word which I haven't heard is inflation. So, in ASEAN, is inflation pickup is not a concern at all at this moment to you? So it's a kind of, we are seeing the relatively higher growth, but without fearing any inflation pressure. So we are in the Goldilocks. Is that what you're understanding? Anyone who wants to?
Well,
okay, Tiwa and then.
Okay.
Well, our inflation forecast for 2018 went up quite substantially to around 4.3%. Okay. But we expect this to go back to the normal target range of 2 to 4% at 3.5%. But there are short-run pressures against inflation. One, we've seen oil prices moving up to beyond $66, $67 per barrel. Our forecast was only about $65 to a barrel. So that's one of the sources of inflation. Second, of course, is that we would expect some pressure coming from the so-called tax reform package because of the increase in the excise tax on fuel as well as on sweetened beverage. But this is short term in the sense that in the medium term, we would expect that the revenues that will be realized from these tax initiatives would contribute to the increase in the productive capacity of the economy. So the short-run effects on inflation should be more than offset by the increase in the productive capacity, more supply, and therefore good motivation for inflation to start coming down. So from our perspective, yes, there are short-run pressure against inflation, but we expect this to start coming down before the end of the fourth quarter and start coming back again to 2 to 4%. Right now, we haven't seen as yet at this point the adjustment in our own policy rate because we would expect that when inflation rate is restored to the target of 2 to 4%, there's very little point in trying to adjust the monetary policy at that point. After all, inflation expectations continue to be well anchored to the target of the BSP at between 2 to 4%.
Eddie, I want to go to the medium-term issue, but you want to add something on the inflation?
Yes, of course, this is also what we are seeing in Indonesia. We are forecasting our inflation this year is 3.5%, which is on the mid of our target, 3.5% plus minus 1. The same with DUA. We are watching the risk is coming from oil price, of course. We are assuming now $60 per barrel. But please be assured, I think this region has a very disciplined and strong monetary policy framework. Inflation targeting Indonesia, Thailand, and Philippines also monetary framework, policy framework, which is also in Malaysia. And the rest, be assured, we are central bankers in this region is very consistent, very prudent. We already built our credibility of monetary policy so many years. I think that will be a guide of our policy going to the future.
I think in general we all agree that in ASEAN economies now in the short-term outlook is very bright. ASEAN will continue to, and thanks to the, as you mentioned, good macro management actually. And so I think that we generally agree. But real difficult issue that we have discussed is whether the ASEAN can continue to grow and avoid the middle-income trap. And then especially given the protectionism around the world, whether the manufacturing sector is not creating enough jobs, why it needs to generate the young people's jobs. So I think medium-term risk in ASEAN seems to be much more important. See, we have very little time left, but based on what we have, our boss discussed, in the first session and the discussion in the second session, let me ask a few medium-term issues. Jessica, about the digital economy, we have a long discussion in digital economy. It focus more on the regulation part, but I want to focus more on the real-world side. Okay? Do you think really that the digital economy can be a new source of growth and what you're really seeing? For example, some people are worrying about it may destroy the job. Some people worry about it may actually, the tax revenue may be smaller. But do you think that the digital economy can be a new tool for ASEAN economies to catch up or leapfrog the advanced economies in the medium term? Please go.
Well, I'll probably start by saying that I think the digital economy, whether we like it or not, is upon us. And when you read articles, you will see sometimes actually increasingly I'm starting to read polarizing views about whether, the whole tech disruption is actually good or bad and depends on your perspective. But there is certainly potential, and we've touched on this in the earlier panels as well, for enormous potential, in fact, and we see this also in Malaysia for the digital economy to really increase access to opportunities, I think economic opportunities for more people in the country. And we've also been talking about trade protectionism and the moves towards that. In my perspective, I think there is also, against this moves by some countries to increase what you might call protectionist measures. In fact, I was surprised to learn that between 2008 and 2009, there were 390 trade protectionist measures that were put in place by 19 out of G20 countries. So, that remains a cloud, if you like, over the global growth prospects. But at the same time, you have this whole explosion of the digital economy in parts of the world. And I think it will, it could do one of two things. One is actually potentially act as a counterbalance to what might be seen as a retreat from the global economy, in a sense that you can erect barriers, but because digitalization actually really just increases the connectivity to the extent that you wonder how long you can maintain these barriers, even if you could effectively erect them. And secondly, I think it also opens up opportunities, I think, to create, potentially a whole new virtual supply chains, particularly in the services side. So that promise is there, I think, with the digital economy, and Malaysia being highly open, economy, we do expect that we can benefit tremendously from those opportunities. But I would say that what we need to do, I think, and that's something that within Malaysia and the government, with thinking a lot harder, even in the financial side where I'm directly involved, we're thinking a lot harder about how we can optimize or maximize the spillovers of this technological, as we move up the technology ladder, how do we maximize the spillovers for our economy? So it's things like, it was touched on this morning as well, it's things like the human capital, your labor policies, what we do about education and things like that. But I think also the engagement, the interaction between economic agents, I think, in the digital economy is changing as well. So the way we even approach policy, certainly in the financial side, how we interact with the financial institutions, how we engage them on some of these developments that are taking place. I think that top-down policy direction is potentially a thing of the past. We do need to involve them in how we decide on how to move forward.
That requires human capital. Well, let me very quickly ask Diva, into that discussion that we had during the lunchtime. When I hear about the competitiveness of this digital economy, what I'm thinking is the PhD from MIT, PhD from the Stanford engineer who is working in Silicon Valley. But do you think that the Asian economy, the question from the floor in the first session, not as a user side, consumer side, do you think that Asian countries can maintain competitiveness in digital economy as a producer, to speak frankly, given the relatively not very high level of tertiary education and quality?
Well, I think so. First, I think we have the Asians have a good appreciation of the different functionalities of the digital technology, to the extent that this is leveraged and harnessed to revolutionize payments and settlement system, to revolutionize the delivery of services. I think to that extent, I think we will continue to be competitive. That's one. Second, in almost all jurisdictions here in Asia, IT, financial engineering, sciences are always given stress. And I think this provides aptitude to our young children, to our young people, to be able to harness technology and make use of that in terms of enhancing our growth potential and, in fact, increasing our potential output in the process. Yes, I think we cannot overemphasize the importance of digital technology to the extent that it can, in fact, increase our potential output. But between that and actually harnessing this will require development of both soft and hard infrastructure. And that is a challenge to government and policymakers. Second, of course, is the challenge to developing human capital. I think it is important that, especially in Asia, where we continue to enjoy demographic dividend, between enjoying the demographic dividend and actually being able to harness them is a challenge. We need to provide them with opportunities, training, and good education. So I think these are challenges to both policymakers and the government itself.
I want to continue, but there are so many other medium-term issues. So let's move on to our ask infrastructure.
Can I talk on the digital?
Digital, okay, please, yeah.
I think we discussed in the morning how Indonesia has been quite progressive in developing the digitalize. Here we talk about 177,000 startup companies, development of the fintechs, and so on. We talk in the morning the issue of human capital, infrastructure development, which I'm talking later on. But I think I want to stress a number of policy issues that we are preparing and we addressing. First, I think we need to talk about, the technological platform. Our fintech companies now, the size is not that large. The question whether we need to go to single platform or multiple platform. What our view is that we need to develop interconnected multiple platform, which will be connected to our national payment gateway. I think that's first. Second, we need to connect the fintech companies with the formal financial institution, banking. We need to connect the banking lending with peer-to-peer lending of the fintech. We need to connect the fintech for the payment system with our national payment gateway. So there is to avoid the shadow banking. I think this is important. And the third is, of course, we need to increase our competitiveness. For Indonesia, as we talked this morning, the SME development is one of the benefits that we can reap from the digital economy. We need to enhance the competitiveness of our SME, standardize the product, entrepreneurship. Because going to the marketplaces, then we have to standardize of the batiks, of the coffee, of the rice, and so on, to be put in the marketplace in the digital. This is the thing that we are focusing on.
I think it's a fascinating topic. We can spend tons of time. It's a pity, but I think not only the digital economy can be a new source of growth, but I think there are many other structural issues for ASEAN to overcome the medium-term, the middle-income traps. But Chantaban, you have been, advocating the regional integration quite a long time. So, what is the current stage of the ASEAN integration, regional integration? Many people say that the low-hanging fruit is already taken, and the ASEAN integration proceeds very well from the beginning of 2000, but looks like it reached the plateau. Is that the correct view, or is it too pessimistic?
We were talking about the whole digital and the new growth model this morning. I think that would be the future from that low-hanging fruit. For instance, within our country, we have workers from our neighboring countries working in the millions. If they could repatriate, remit funds back home in the most efficient, cost-saving way, that's an area where the digital economy, the payment system could help bring down the cost of intermediation. And many other talented individuals would also be having greater mobility within our own ASEAN capital. I was looking at the figures that FDI flows into ASEAN used to be, for instance, like 90 or so billion US dollar. Before that, only 5% came from ASEAN itself. Today, more than a quarter is intra-ASEAN. So there is still room for, and every day we hear of Thai companies taking up ventures in neighboring countries because we also have lost competitiveness in maybe certain areas that we need to move on. And there is synergy still within our region. For Thailand, our trade with the rest of the world, ASEAN plus China is almost half, 40% of our trade. The rest is 10-10-10, the G3. Of course, they are large trading partners, but increasingly we are seeing some final demand within our own region, especially tourism, for instance. If you look at tourism, it's purely a regional phenomenon that out of 100 or so million Chinese that travel overseas, 10 million come to Thailand, for instance. So that's, well, it's both ASEAN and Asia, East Asia that we are experiencing. So I hope we have not exhausted that low-hanging fruit, and with a new growth model that my only plea would be that we keep our options open in this new growth model because we don't know what challenge. We were all talking about the labor, the technology. I was thinking of the legal regulatory infrastructure. I mean, all our rules and regulations were written for the days of the analog. And today's digital world, I don't know. You know, the way, okay, we all know that for expediency, we should all allow electronic version. But the way the law says, you need to submit. And in Thailand, submit means you need physically paper, not transmit. Things like that. There are, I could name many other infrastructure that we need. I mean, the challenge is there, but we need to have that ecosystem that facilitates that. And I think those will probably be the next growth area for the region.
You gave a wise answer to my non-wise question. So I asked for the traditional trade integration, but you combine with the digital economy can be a future. Quickly, very short. Okay?
I just want to add to that I think also the policy cycle is going to be much shorter. I think that's something we probably need to acknowledge and learn how to deal with as well, because technology changes at such a pace. And I think any policies that we may develop or put in place today, I think very quickly, needs to be reviewed and updated. So I would just add that comment to Chantaban's.
Hoi, Chantaban and mentioned, and Jessica also mentioned the investment side, digital economy, the regulation side, harmonization, all this issue. But human mobility within ASEAN, what is the labor mobility within ASEAN? What is the current stages? Is there room for improvement?
Yeah, I think there's a lot of concern about aging population in the region. But Asia, the region is very diverse. So on the one side, you have Philippines, which is still high fertility. Then you have Thailand, you have Vietnam, which is aging rapidly. And so when you think as a group, right, there's a lot of synergy if you allow more labor mobility across the region. And already that's happening, but it's not happening through formal channel. I mean, Singapore is a very good example where there are more than 1 million foreign workers, right? So we have reaped the so-called demographic dividends by leveraging on the surplus labor of other countries, But of course, there are all social issues that arises when you have very large influx of foreign workers, and as a result, now they've decided to slow down the pace. But I would say that labor mobility has a lot of potential to enhance the growth potential of the region if it's managed. So far, it's been mostly driven by the market forces. So, Malaysia, Thailand, they have a very large, foreign population working there. And without the foreign population, they won't be able to sustain, the rubber industry in Malaysia and in Thailand, So there must be a better way to manage the labor flow across the region. That's one. The other is, because the country is so diverse, some countries have surplus of savings, and, when I look at the CLMV countries, they have been a major beneficiary of this integration, right? They have huge capital flows, FDI flows into the region. Vietnam is a particular beneficiary of massive inflow from Korea, but also from ASEAN countries, Thailand, Singapore, Increasingly, they have become, ODI, overseas direct investment abroad. So I think, as we look ahead, I think market forces is going to drive the integration, And, unfortunately, the institutional development is going to lag behind. But at some point, they need to catch up with the market. And this is where I think actually the digital economy actually is going to even accelerate the whole process. Because, in the service sector, it's even harder for the regulators to try to stop the process of integration.
Thank you. Okay, it's very quick, really short. Okay,
One of the aspects of regional economic integration is the so-called cross-accreditation of professions. And I think within the ASEAN right now, an architect, engineer, teacher, I think doctor, and other professionals can practice their profession within the ASEAN, as long as there is this cross-accreditation principle agreed upon between, let's say, two ASEAN countries. But on a multilateral basis, this is something that has been considered under the framework of financial services liberalization.
That's quite encouraging. Perry, I saved this last question
Okay.
to appreciate the BI's wonderful preparation and support. All this conference, wonderful conference, including my batik. So so really I appreciate. So the last question is actually everyone. When I actually do some previews and say what are the most difficult and most important medium-term challenges the ASEAN countries are facing, everyone mentioned infrastructure.
Yeah.
Yeah, but there is a common understanding. But let me ask, when I look at the ASEAN country structure, revenue ratio over GDP is still, by comparing income levels, quite low. In Indonesia, it's only 12%, and many ASEAN countries below 15%. If you do not have enough revenue, I know we can always talk about private sector participation, but it's very hard, we know that, to do the infrastructure. If you have a huge infrastructure demand, which we know is important, but if you have a very limited revenue sources, so how you solve this problem?
This is the thing that we are addressing over the past 2 years, interagency. We have a coordination, what we call it financial market deepening acceleration. A coordination between the government, MOF, central banks, and our colleagues from OJK, Financial Service Authority. We have 245 strategic projects. Over this year, next year, we have 20 infrastructure project that already ready on the construction space. It's ready. 20 projects ranging from the toll road, airport, electricity, and others. Of course, we do understand that all of this project cannot be financed by the budget. And thanks to Minister Mulyani, which is very supportive of capital expenditure for the infrastructure. But it is a limit space for the fiscal stimulus. We also added the SOE injection, capital injection. So the SOE can leverage to issue securities. What we are focusing now is private financing for this infrastructure. How to do that? We are issuing a number of securities through the market to finance this infrastructure. Jasa Marga, for example, our toll road, they have stream of revenue. Then we securitize those stream of revenue and we issue earning back security.
Securitization.
And we also issue project bonds and a number of securitization of this project. So I think this is the thing that we do, reinforcing the acceleration of the financial market deepening, which is good for withstanding external shock and good for financing of the economy and good for the financial stability.
Financial engineering. Okay, it's fascinating. But given the time constraint, let me have 2 questions from the floor. The gentleman over there. Please identify yourself, and then I'm going to ask the.
Thank you, sir. Indonesia, Malaysia, and Thailand are the largest producers of palm oil globally. These commodities not only now the main contributor to our GDP, but also where more than 3 million smallholders, which are relatively from the rural and the poor, are depending their livelihood on this. With the recent action taken by EU Parliament, banning the importation of palm oil for the use of biodiesel, so not taking any action against other vegetable oil, which are very unfair and very unethical. So what are the most suitable actions to be taken by the ASEAN member countries against EU? Thank you very much.
Wow, this question I think is more like a detailed products.
Can we collect a question? Can we collect a question? You want to collect question first? Or?
Yeah, sure. I think. So,
We can just answer.
I can handle this.
No, I can answer.
Thank you. I'm Ronald. The new digital economy has always been associated with premium services, capital-intensive industry, and sophisticated technological advancement. And we know that all these sectors are obviously absorbing fewer employees compared to labor-intensive industries, such as agriculture and labor-intensive industries. Indonesia, however, we are still experiencing a relatively high level of unemployment rate, standing around, I think, 5.5% in the last August 2017. So what do you think the government, not only in Indonesia, but I believe also in this region, should do to address this issue, i.e. to minimizing or mitigating the potential risk of increasing in unemployment rate due to the technological investment?
Thank you very much.
Thank you.
I cannot finish the questions because my MD Lagarde will be upset if I do not take anyone from the floor, from the females. So, is there any
female?
females who want to ask?
Any female
Please
question?
volunteer. We need a female participation. No one?
Uh-oh.
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 Please.
Come on, girls, ladies.
Ida? No kidding.
Ida, please.
No. Is there no volunteer?
Okay.
Someone? Okay, then, yeah, she shouldn't push it. But so, actually, two questions are both
Okay.
Indonesia, so you can close.
First on the
Oh, there is a late question. Oh, please. Please go ahead.
It's Nupur Gupta from Goldman Sachs. Just to check, if Treasury yields sort of sell off to around 4%, and what are the backstops that the central banks could have if capital flows out?
Okay. So that one, I've kept the flow outflows issues that I may actually ask Chantaban later. But do you want to address first two questions?
palm oil. I think this is the issue that we are confronted with, both Malaysia and Indonesia, because there is a European making the case of quote unquote issue of the environment, issue of others, which is we view it as a non-tariff barrier. Of course, we fight for the legal issues on this aspect. I think we have to get together, Malaysia and Indonesia, to take this issue legal to the Europe. But at the same time, I think you're right. We need to do a lot of value-added, industrialization of the palm oil. Palm oil, the derivative of palm oil is more than 15 products. From the oil, until cosmetic, and I think we have to do more, value-added technology and industrial aspect of this palm oil. Second, on the digital economy, I'm not sure whether the disruptive of the digitalization of economy marketplace for Indonesia, the disruptive or the labor impact. Indonesia is much greater than labor creation of using marketplace for the SMEs. Take Gojek, for example. Gojek expanding from the motor transportation into Go Clean, even Go Massage, And the old days, ladies, woman, which is only receiving order from the laundry, only from the neighbor. Now they are taking order from the cleaning, the laundry, cleaning house, and so on. A lot of them. How many motorcycle riders have been created? I think from the SME, I do believe the use of technological platform, marketplace, will create labor and inclusion of the economy. I do agree. The question is right. How can we invest in technology for creating fintech, financial technology, marketplace, that benefiting the SME, the national economy? This is the question of what we call it the national champion. Indonesia need to develop the national champion, which is interconnection of the market, platform, technological platform that already available. We cannot, every technological platform provider cannot grow by themselves. To create unicorn. To have a unicorn, we have to develop the national champion, which is a collection, interconnection of this tech, fintech, and other marketplaces.
Thank you. And given the time limit, I think the last question about the capital outflow risk, I think we have discussed, let me summarize what I learned from the panel, is that I learned that at this moment, macroeconomic management of ASEAN countries are quite sound, so the risk of the capital outflow from the region is limited. And also when this happens, ASEAN countries rely on the exchange rate flexibility to mitigate it. And then also ASEAN countries are now working on the joint paper about capital flow management measures, which can be also one of the policy tools. I think that seems to be so. Probably the lady can wait for the joint paper from the ASEANs come out, and she can have a more detailed answers. Thanks very much. It was a kind of really fascinating discussion, and I can see that yesterday our managing director, together with President Jokowi, went to the market, and I will see that really vibrant, energy from the market, and the rising population, and the energy for the business sector and private sector. But together with these high quality policymakers, I really believe that the future of ASEAN is quite bright, and we hope that we can continue to have a very constructive dialogue between the ASEAN countries and the fund, and then also it can be highlighted in our the annual meeting in October, which has only 226 days left. Okay, so thanks very much. Let's give a big applause before actually close the meeting. Just a big applause to the panel. Thank you.
Ladies and gentlemen, that marks the end of the third session. Please give one more round of applause for the speakers and chairperson while we allow them to return to their seats. Bapak Periwarjio, may we ask you to stay on the stage to give your concluding remarks. Ladies and gentlemen, distinguished guests, after 3 sessions of fruitful discussions, I would like to invite Bapak Periwarjio to give his conclusions about today's conference. Bapak Periwarjio, the floor is yours.
Thank you, Nadia. And thank you once again. On behalf of Bank Indonesia and jointly co-organized with the IMF, we proudly present and conclude this outstanding international conference. One of the kind of the conference. The conference that not looking back in the history, not only looking at the current state, but also going to the future. Conference that seeking new growth models in the changing of the global financial landscape. This is an international conference of one of the kind indeed. And this is also marking the countdown of Indonesia hosting of the World Bank and IMF meeting. We will running more than a week meeting from the 8th to 16th of October this year. The countdown is there. So what we learn from today's conference? Let me just mention 3 of them. 3 of the many things that we learn from today's discussion. First, 20 years has been passed by after devastating ASEAN financial crisis 97-98. 20 years passed by, now this region, Indonesia and ASEAN region, has emerged becoming the reform, resilience, and progressive economy. This region is one of the most vibrant economy in the world. We have high economic growth, macroeconomic financial stability, and most of all, a structural, progressive, and interconnected economy in the region. But of course, we need to look into the challenge that we are looking into. Challenge from the global, challenge from the region. We talk today the challenge of the protectionism in the advanced country. Policy normalization of monetary in the advanced countries, as well as geopolitical risk. We're talking about the challenge of the new world of digital economy. That this region must take into account today and tomorrow to search, to find, to form new growth models in this changing global landscape. That's number one. Number two, what kind of a new growth model that this region need to take into account now going future? This is a still searching growth model, but this region, as has been experienced on the past years, very easy to adapt to the changing environment. The new growth model of this region will have some part of the continuing fundamental and reform that we have been doing so many years. This region need to continue open trade and investment policy. That's the soul of this region. This region need to continue reform. Because the reform is the soul of this dynamic of this region. This region need to go into the sound macroeconomic financial policy. And most of all, this region need to continue to be integrated. Economically, under ASEAN economic integration, financially, under ASEAN Financial Integration 2025. This is the current stream, the underlying new growth model. What the added value of new growth model? We talk today about new dimension of new growth model. One is, of course, the inclusiveness of growth. We heard from Madam Lakat, the inclusion of the financial growth will elevate the growth dynamic of this country. The population bonus this country can be elevated to source of the growth. The untouched of the sector of the economy can elevate the growth model to the future. The second dimension of the growth model, of course, making the most benefit of the digital economy and finance. We're just talking about the digital economy and finance is here to stay, whether we like it or not. This region need to better prepare about the new source of growth model in digital economy. The digital economy, that's the third conclusion or lesson that we learned today. There are many benefits, especially for the SME development and financial inclusion, which many of this region can take benefit and rest. But some part of the country in the region may have disruptive effect on the labor, especially on those countries that more developed in manufacturing. Because the use of robotic and artificial intelligence may, have impact of those manufacturing and productive process. We need to better prepare on facing the digital economy and finance. On those aspects, we talk about how we need to be preparing it. The first, of course, the development of the startups, the development of new venture in the digital economy, including the finance, the fintech development. We need to develop the unicorn of this region, from small startup into multiple platform international champion. We need to invest more on the human capital to better prepare our youngster to be in the digital economy world. We need to prepare the older people to adapt to new digital economy. And most of all, we need to develop the infrastructure. The closer digital economy needs support of distribution, logistics cost of infrastructure. And by doing that, I think the new source of economic growth can capitalize the digital economy. But of course, there is mitigating risk of digital economy in finance. The risk of financial stability, of the shadow banking, need to be prepared. The risk of the currency, digital currency, and also risk of cross-border and cyber security. Those aspects need to be into account. This is the search that we're talking about, and under ASEAN financial integration, we look into this aspect of digital economy and finance to the benefit and how to mitigate the risk. This is the third aspect that we learn today. The fourth aspect we just conclude today, that this region, once again, giving promise of this region. Not only resilience in withstanding the external shock, but also promising a benefit of the economy. Not only to the people in this region, but to investors in this region and globally. Better economic prospect, short term and the longer term, continue reform, a lot of opportunity in this region. For those of you that investor from the global, then please invest in Indonesia and ASEAN. No other region that promising continuing reform, resilient, and prospective economy. I think those aspects that we learn from today. Once again, thanks for the IMF for excellent co-organizing this conference. Thanks for the distinguished speaker and panelists. Thanks for distinguished participant. Last but not least, please start from today, for those of you that are not registered for annual meeting, don't be late. We already secured the hotels. The online registration for meeting already there. And the online registration for the tourist destination already there. So please register now, before too late. Please register to the meeting, and once again, please also register where you want to go. In the Bali Islands, Borobudur, Komodo Island, and all of the exotic places. That's on the final remark. With that, thank you, and have a good night.
Thank you, Bapak Periwarjo, for the concluding remarks. Ladies and gentlemen, Indonesia is ready to host the 2018 IMF-World Bank Annual Meetings. Before we end this day, here is a teaser of what's coming to Indonesia in October 2018.
That the economy hasn't been doing very well.
The time to repair the roof is when the sun is shining.
Unemployment is closely linked to the boom in business for applications like Gojek, Grab, and Uber.
Come, join us on the voyage to Indonesia.
Ladies and gentlemen, this concludes today's event. We would also like to inform you that to support the Voyage to Indonesia program, the Indonesia Deposit Insurance Agency will hold an event here tomorrow on bank restructuring and resolution entitled Strengthening Infrastructures for Financial Crisis Resolution. On behalf of Bank Indonesia and the IMF, I would like to thank you for coming and wish you an enjoyable rest of the day. Wassalamualaikum warahmatullahi wabarakatuh.